Welcome to the deep dive. Okay, so Broadcom Inc., a huge name, foundational tech, really. They just dropped their Q3 results for fiscal 25. And the numbers, they look pretty electric. But the question is, are they just riding that massive AI wave? Or is there something more strategic here? Like, have they positioned themselves to actually drive infrastructure's future, build something, really resilient? That's what we're trying to figure out today. We want to get past the headlines, really unpack Broadcom's official press release. We're going to try and pull out the key nuggets, understand what's really driving the performance, especially in those crucial areas, AI infrastructure. So we're digging into their announcement from September 4th, 2025. It covers the quarter ending August 3rd, and it also gives us a peek at their outlook for the next quarter. So revenue, profits, how the different parts of the business are doing, what they see coming, all of it. Whether you're prepping for a meeting, just trying to stay current on tech, or maybe just curious how these giants operate. This deep dive should give you a pretty clear picture of where Broadcom stands and where they're headed strategically. Okay, let's unpack this. Let's see what story these numbers really tell. All right, starting with the big picture, Broadcom's calling it a record-setting third quarter. And you can see why. Total revenue hit, what was it, $15,952 million.
Yeah, just under $16 billion.
Which is a hefty 22% jump from the same time last year.
Mm-hmm.
So beyond just saying record, what does a 22% year-over-year bump really signal for a company this size?
Well, it's significant. It's not just the growth, it's sustaining that kind of growth at their scale. For a tech leader like Broadcom, 22% year over year isn't just like the market lifting all boats. It suggests they're really grabbing market share in key high growth spots, or maybe demand for their core stuff is just exceptionally strong. It really speaks to how relevant they are in the market right now. Deeply relevant.
Okay, and then profitability. This is where it gets interesting, right? You have the GAAP numbers, which swung massively from a loss last year, nearly $1.9 billion,
Like Q3 FY24.
to an income this quarter of over $4.1 billion. That's a huge turnaround. But then you also have the non-GAAP net income number. That's $8.4 billion, much higher.
Yeah, significantly higher.
So for people trying to make sense of this, what's the key difference? Why do tech companies often lean on these non-GAAP figures?
That's a really important distinction. Look, the GAAP loss last year, that likely had a lot to do with charges from big acquisitions, especially VMware. Integration costs, amortization of intangibles, things like that. GAAP rules require including those kinds of, let's call them accounting complexities. They can sometimes obscure the actual day-to-day operational health.
Right.
So non-GAAP aims to strip those things out. Amortization, stock-based compensation, stuff that might not reflect the core business performance directly. It gives you, hopefully, a cleaner look at the ongoing operational profitability.
Okay.
And that much higher non-GAAP profit. It tells you the core engine is running really, really strong.
Yeah.
They've likely moved past the heaviest noise from the acquisition accounting.
So it's a better indicator of underlying efficiency.
Exactly. A powerful indicator.
And speaking of efficiency, that adjusted EBITDA number looks, well, incredible. $10.7 billion.
Yes.
And that's 67% of their revenue. 67%. And up 30% year over year. That margin just seems astronomically high. Is there some kind of secret sauce here? What does that level of operational leverage really show?
It shows a lot. And yeah, 67% adjusted EBITDA margin, especially jumping 30% year over year. It screams strong pricing power, very lean operations, really effective cost control. I mean, very few companies, especially at this scale, can turn revenue into EBITDA that efficiently. It tells you they're focused on high-value, high-margin products and services. They capture a ton of value from what they sell. It really says a lot about the strength of their business model.
Okay, so those top-line numbers, they paint a really strong picture. But, behind the stats, there are always strategic choices, market forces. So what are the actual engines? What's driving this? What did Broadcom CEO Hock Tan point to? Well, he specifically mentioned, and I quote, continued strength in custom AI accelerators, networking, and VMware.
Right, those three pillars.
And the numbers seem to back him up completely. AI revenue growth accelerated to 63% year over year, 63%, hitting $5.2 billion just in Q3.
Yeah, $5.2 billion from AI.
Now, the AI chip space is obviously super competitive. So for Broadcom to not just grow, but accelerate like that, is this unique to them? Or does it say something bigger about maybe how foundational their contribution is?
That's a great question. I think it's less about just riding the general AI wave and more about their specific strategy. Broadcom's strength here seems to be in these deep, almost sticky relationships with very large customers. Think hyperscalers.
Okay.
They need custom silicon, chips designed specifically for their huge, specialized AI workloads. It's not off-the-shelf stuff.
Right. Tailored.
Exactly. Deeply integrated proprietary hardware designed for maximum efficiency in these massive data centers. That creates a revenue stream that's much more predictable, much stickier. It makes Broadcom a fundamental enabler for these big players, not just, another supplier they can swap out easily.
A strategic moat, almost.
Precisely. They built a strong one there.
And apparently, that acceleration isn't stopping. They're projecting AI semiconductor revenue to hit $6.2 billion in Q4.
Another $1 billion sequentially.
Which would mean, get this, 11 consecutive quarters of growth in AI. 11 quarters.
That's incredible consistency.
Especially in a market moving this fast, right?
Absolutely.
Right.
11 straight quarters of AI growth. For a company this size, it's almost unheard of. It strongly suggests their custom AI chips and their networking gear are becoming, indispensable infrastructure for the biggest AI players. It implies these long design cycles, deep customer collaboration, and a roadmap that's just perfectly tuned to what AI compute needs right now.
Yeah.
This isn't just one good quarter. It feels like a sustained multi-year validation of their strategy in AI.
Okay, let's shift focus a bit. Let's look at the segment breakdown because that clarifies these engines even more. Semiconductor Solutions. Yeah. That brought in $9.166 billion, so 57% of the total revenue.
The bigger piece.
And it grew 26% year over year. Pretty strong. Then you have Infrastructure Software. That was $6.786 billion, so 43% of total revenue. And that grew 17% year over year. Still solid growth.
Yeah, very solid.
How do these two parts, semiconductors and software, work together in Broadcom's strategy? Do they complement each other?
Oh, absolutely. Massively complementary. They form this powerful sort of dual engine. The semiconductor side, that's where you find those high-growth custom AI chips and the networking gear we talked about.
Yeah.
Clearly the main growth driver right now and the bigger chunk.
Right.
But the infrastructure software side, which got that huge boost from VMware.
Yeah, the acquisition.
That provides this really crucial layer of recurring revenue. And software-defined networking management tools, things essential for the data centers running all that hardware. It's smart diversification. They're not just selling the hardware. They're selling the software that manages and optimizes it.
Yeah.
Creates a much stickier, more complete solution for their big enterprise customers.
Makes sense. Okay, another really critical health metric, free cash flow.
Always key.
And Broadcom knocked it out of the park here, too. Record free cash flow, $7.024 billion.
Over $7 billion.
Which is 44% of their revenue. And get this, up 47% year over year, almost 50% growth in free cash flow.
That's massive.
And their CFO, Kirsten Spears, she highlighted this, saying it reflects that strong operating leverage and, importantly, a commitment to returning excess cash. So that $7 billion number, especially when you see their capital expenditures were tiny, just $142 million. What does that kind of cash generation ability give Broadcom?
Oh, it's the lifeblood. Seriously, that's $7 billion with minimal capex. That tells a huge story. It means they're just throwing off enormous amounts of cash after paying all the bills and making necessary investments.
Right.
And that gives them immense strategic flexibility. Huge. They can plow money back into R&D for the next big thing. They can go after more strategic M&A if they see an opportunity, pay down debt. Or, like the CFO mentioned, consistently return cash to shareholders through dividends and buybacks.
Which they are doing.
Exactly. It's a sign of an exceptionally efficient, incredibly cash-generative business. That's a major competitive advantage. Financial resilience built in.
Okay, so beyond the growth, beyond the cash machine,
Yeah.
how does this translate into value for shareholders, and what does the road ahead look like, according to them? Well, for shareholders, the board approved another quarterly dividend, $0.59 per share.
Consistent.
And they mentioned returning $2.8 billion to shareholders just in Q3 through dividends.
Yeah, and that consistent dividend, backed up by that massive free cash flow we just talked about, that's a very strong signal.
Of commitment.
Commitment to shareholder returns, definitely. But also financial stability, discipline, and management's confidence, right?
Yeah.
Confidence in their future profits and cash generation. For investors, it shows Broadcom isn't just about growth on paper. They're reliably sharing the success. Makes them attractive for the long haul.
And underpinning that stability, their cash on hand is pretty solid, too. Cash and equivalents stood at $10.7 billion at quarter end.
Decent war chest there. Gives them options.
Definitely. So looking ahead, their forecast for Q4, fiscal 25, it also projects continued strength. Revenue guidance is around $17.4 billion.
So another sequential jump.
Yeah, and that would be a 24% increase compared to Q4 last year.
Still strong year-over-year growth.
And that adjusted EBITDA guidance, expected to hold steady at that incredible 67% of projected revenue.
Maintaining that high margin.
So what stands out to you in these Q4 projections? Does it line up with the AI and infrastructure story we've been discussing?
It absolutely does. It's incredibly telling. It shows management is clearly confident that demand, especially for AI and infrastructure solutions, is going to stay strong. Keeping that 67% adjusted EBITDA margin projection signals they believe their efficiency, their pricing power, it's all sustainable.
Yep.
What really stands out is they're not just talking about maintaining things. They expect to accelerate further in key areas, like that AI jump to $6.2 billion.
Yeah.
It signals a strong belief that these growth engines, they're going to keep firing, even with whatever broader economic stuff might be happening. It really reinforces that their strategic bets are paying off. Big time.
Okay, so let's try and wrap this up. We've seen Broadcom deliver, well, a genuinely benchmark-setting Q3, driven hard by that unique strength in custom AI accelerators, networking, and also the VMware integration adding that software muscle. And it's all underpinned by just phenomenal free cash flow generation and a clear commitment back to shareholders. It feels like Broadcom is doing much more than just benefiting from the AI boom. They seem to be actively architecting parts of it.
Yeah, they're in a foundational position.
So here's something to think about as we finish. Given Broadcom's sustained acceleration in AI chips, heading towards 11 straight quarters of growth, consider this. How might this deep, consistent investment, especially in that custom silicon for AI infrastructure, how might that not just boost Broadcom's own bottom line, but actually underpin and enable the bigger tech shifts we're seeing everywhere?
Yeah, how does their success influence a whole ecosystem?
Exactly. How might Broadcom's continued strategic focus in these really critical foundational areas? How could that influence the pace, maybe even the direction of innovation across the global tech landscape for years to come? Could they be solidifying their role as like an indispensable architect of our digital future? It's a pretty profound thought about the scaffolding, really, of where tech is headed.